July 20th, a very hot Thursday afternoon, where I am anyways. I'm Mark from House Technical Analysis, and I'm here with the courtesy of some good friends at FEGtoken.com and smartdefi.com, and of course our exchange partner at BYDFi.com. And as usual, we are giving away 2 trading bonuses today to someone with a user ID that has signed up with our link. The code is capital K5, capital Z4, capital TP. Or of course, you can find the link on my X page, or of course at House TA on YouTube. So welcome everyone. Now that our housekeeping is out of the way, what we are looking at today is a 4-hour chart of Bitcoin. And there's a reason why we are showing this chart. If we go back in time to the 27th of May, which was a Tuesday, and we actually drew that yellow horizontal line on that day because we could connect the top of that wick to the T line, which is that yellow line to the left. That's the T line. Quite often I tell you in here that I look for areas that I can connect the T line or the 5 EMA to price, because typically I find that those areas become ranges or areas of support and resistance later on. And lo and behold, we come to Monday the 9th of June, and we essentially wicked that level again. Now listen, this is not pin the tail on the donkey. You know, we can be out a few cents or even a few dollars, right? Where the idea is to get close to the right ranges. I think this qualifies. The fact that every time it tested this area up to here, that it failed after, kind of validates for you that this is some sort of a legitimate level that needs to be dealt with. And this 4-hour chart kind of gives you the idea of how patient we have to be in between what we think is going to happen and what actually happens. And here we are, going back to the 27th, when we could first connect that top. We took a run at this level almost 3 times, and here's our 3rd attempt back on Thursday of last week. And during that time, when we were doing our stream, we said, look, this is an obvious level that needs to be dealt with. And when price does kind of break through it, hey, then maybe we're on to something. And I think we've proven to ourselves, and this is the nice thing about being able to do these sessions live, we can come back and see where we went wrong and where we were right, and hopefully be able to figure out why. Okay, so in addition to this level being critical, and that level was 110.720, and again, you might have a difference of $5, $10, $15, $20. That's fine. It's just, we're in the same neighborhood. But what's also important is, as we're watching price deal with this area of which we know is resistance, when we're using our volume profile, we get an opportunity to see, because these lines extend out, where the volume shelf is and where the gaps are. We know that this is the biggest shelf we have. And look at how price treats it when it gets close to it. Big move on the way up, forms a little bit of a bench on the 4-hour, does it again here on the rollover, does it again over here, right? So the point of control is relevant because it's providing an area of support and resistance. And these are very simple tools that we have. A volume profile, everybody can use, right? Everybody can use it. It's pretty easy to read. So if this is the biggest shelf, then we know we have a gap to the upside here, identified by the upper value range, and then down here, a gap identified by the lower value range. So everything in between is concentrated trading, and everything outside of that gets a little skinny. But we know where the gaps are. But it's important to know what's acting, at least in my opinion, what's acting as support and resistance. I don't think it's an accident that the move you get comes off the point of control. I really don't. It's because it's the largest shelf when you see it on the volume profile. How critical is it, or was it, that price held this point of control? Quite significant, because if you fall into this gap, then we're having another conversation altogether. But right now you have a bullish chart on the 4-hour. And our idea, what do we talk about in here, is that we don't want to trade the chop. Like this should be, let's make this Stop the Chop Thursday. Right? We don't want to trade chop. We want to trade the breakouts and the breakdowns. That's what I like to do. I don't want to trade the flat stuff. Right? There's not a lot of money in here comparatively to these nice swings up and down. That's what we're looking for. Breakouts and breakdowns. So when you see price testing and using support, in this case, the point of control, and this could be any other significant tool that we have, or technical tool that we have to measure price, but in this case it's the point of control, which is averaging all this past price and determining that this level is the mean. And you can see how price reacts to it. This 4-hour chart we've been watching for a while, and it's taken the better part of a month to actually break through this level, right? But here we are. We don't know. We get choppy in here, and we don't want to be taking every single buy and sell signal. But we're waiting for ones that actually show us some exuberance. And this does that. What do we look for? Overbought and oversold areas. Your stochastic RSI, if I blow it up, that's really oversold. So it means that creates an opportunity for the buyers to flood in again. And when they do, we notice it exponentially in price. Right? Everything else in between here is kind of in purgatory. Right? The objective for me anyways is to try and find the tops and the bottoms within reason. Right? What does our MACD tell us? You start hooking up, look at when your moving average and signal line is above 0, there's a better than average chance that good things can happen to the upside. They certainly outweigh the opportunity to the downside. Although eventually price does roll over, and because nothing goes straight up or down. But when you see the moving average and signal line hold above 0, and then your histograms start to change like they do here or over here, that's telling you that there's an influx of money coming in. And again, when I'm evaluating the trade, I would prefer to see if I'm going long the moving average and signal line on the MACD above 0. Unless it's a bottom where everything is absolutely oversold, that's even better. But as a general rule, more good things happen to me when the moving average and signal line are above 0. And this, again, this is still a bullish chart. Now people are gonna say, well, where does price go from here? That's anybody's guess. you're into pure price exploration now, right? Where every time you turn around, you look at your watch to see if you've made a new all-time high until it exhausts itself. And it will. Eventually, it'll exhaust itself. And all of the narrative about where price is going and all-time high and what does that mean for the world and all this other kind of nonsense will stop. Because the chart's going to do what the chart's going to do. Now, we've looked at 1,000 charts in here, day in, day out, and doesn't matter what's going on. We know one thing. You can trade off almost nothing with very little experience. Right? These are two simple EMAs, 5 EMA and a T-line, which is the 8 EMA. Right? I'm just telling you what they are. I'm not going to make you, send me a nickel so that, you think you've discovered the secret of the universe, because I haven't. What we're interested in is what price does, not what people say. And we can pick that up in our charts. So in our script that we're using, the 5 EMA, you'll see goes from red to white. Why? Well, it's sensing an influx of capital coming in, and it's changing the direction. So that's the earliest signal we have that there's money coming in. The other signal we have, even without our candles, when you see a point like this on short-term moving averages, you're picking up a quick influx of cash, right? These points usually signal changes in direction that have some pop to them. And that's what we have here. So we have the short-term EMA going from red to white. That point you would pick up and go, even if you didn't have a candle. Then you see a confirmation, and then this divergence, no matter what, just stays intact, right? So there we go. That's all it is. Pardon my dog. So you don't even need a candle to figure this out. It's not hard. Anybody can do it. We make it hard for ourselves. So all you have is your candlesticks and a couple EMAs. That's it. And price is moving higher. Where is it going to go to the upside? I have no idea. All I know is that you're still in an uptrend. As long as price is holding and trending the T-line and the 5 EMA like it is here, it gets a little suspect in there, but those two equal bottoms and then pop, snap back higher, and the divergence held. So there's your clue that you were still in an uptrend. Until the chart tells us through our signals, or we start to see maybe our 5 EMA change from white to red, then maybe price is going to pull back. But right now, it's still in an uptrend. So we just continue to ride along until the chart tells us that it's out of gas. And when it does, it doesn't necessarily mean that the sky's falling, right? And sometimes that's the feeling, or it sounds like that's the talk from some people that, hey, oh no, now we're going to go to 0, or we're going to pull back 20%. I don't know. Because all you have to do is just throw a few things up on your chart to try and give yourself an idea of where price may go on a pullback, right? We know that current price looks for past. So if price starts to fade, what's it going to do? First thing it's going to do is it's going to want to come back and test the 5 EMA as a level of support. And this area of 110.7 will probably be a likely spot as well. We'll start to see, as here we see price hitting it from underneath. We'll start to see it tested from the top down. This will be another critical level over time. But in the meantime, that's what we look for. Price to fade to come back to these levels, and if it doesn't hold the 5 in the T-line and starts to break down, well, then you look for the 20. And you have to remember, all of this in here is light trading. So there's not as much holding price up as there is when you see this dense color to the right. So just keep that in mind. And then when you see the gaps, price can rip through those pretty quick, both to the upside and the downside. So what's the future? I don't know. I don't want to start drawing trend lines on this thing like a monkey, and because that's just not going to serve anybody. Bottom line is the trend has been higher, and look at our weekly. It's just nice. This move has been pretty clean. Nice move up, sideways. You get support from the 50 on the weekly, another run up. You retrace, again support from the 50. And what are we doing? Taking out the previous wave's highs. So now that we've done that, it's basically how much more push does this thing have before it wants to take a breath? Because it's accomplished the goal of taking out that previous wave's high. This could have easily been an hourly chart or a 4-hour chart or a 15-minute chart. Okay? So, yeah, you can draw some channels if you want. Might be nice conversation, but really, it's kind of pointless. You're trending higher. You don't need any lines on your chart to figure this out. As long as you're trading above certain levels, you're bullish. When you're not, you're bearish. Okay? So that's kind of what's been going on with Bitcoin. And it's been kind of fun to watch. Right? It's like watching paint dry when we're doing this 4-hour thing trying to take out this level. But once it does, you can see that people still want it. And when we look at our MACD, this is the 4-hour, it still has gas in the tank. Fisher actually wants to kick up again, which is more of a trend indicator, and the stochastic RSI is doing the same thing. Is it going to continue to rise forever? No. But for now, that's what it's doing. One of the things I wanted to kind of talk about a little bit is, when you guys reach out to me sometimes during the week or in between these streams, you share your war stories with me, and I think that's awesome. But I'm kind of finding a bit of a common thread, and I think what's happening is that a lot of people are spending too much time worrying about, the percentage. How much am I going to make on this trade, right? And end up being uber focused on it. And when you're like that in the middle of like a key learning cycle, for example, that can kind of cloud your objectivity. It gets in the way, it creates bias, and the list goes on. So here's what I'd like you to start to do. I'd like you to start to think about when you approach, you sit down at your desk, I want you to start to think about stacking winners first and make that the priority. Don't worry so much about, it's only 40%. I really want 120 or whatever, right? Get your head out of that. When you see reasonable profitability on your P&L, take the money. And as soon as you question yourself, but I don't really want to take it because I want it to go from 40 to 120, doubly take the money, because now you're playing with your own mind, right? So spend less time worrying about where you want it to go, because you think that's where it should be, or that's what your objective and target is. But when you see money there that's reasonable, start to take it. And I'm asking you to do this so that you can program yourselves to become, it's just automatic, right? It'll become a reflex. Boom, my trade's at 40 points, boom, I take it. None of this, I'm going to wait for it to run forever and ever and ever, and you're leveraged to your eyeballs, and price takes a little move down and boom, your whole plan is destroyed. That's not going to help anybody learn, right? So get on the longer time frames a bit, drop the lev, but focus on stacking winning trades and journaling everything you're doing. And then at the end of the week, look back and say, and you're going to see how you've done on each and every trade. They're not all going to be winners. You might lose a few on some. You might make a handful of percent on others, 20, 30, 40 on another lot. And if you're lucky, maybe more than that. But stack the winners. Get into the habit of taking your money, because you can't grow your wealth unless you take the money. That's what the targets are for, so that you actually take the money and try to automate what you're doing. And when I say automate it, I simply mean use the platforms that you have, whatever you're using, whether it be TradingView, which is fantastic, to set alerts. Right? You have to be in the right place at the right time in order to be successful. So if you're, using our script indicator and you're looking to go long, you'll know by the time frames that you chart where to set alerts. Whether it's, when the 5 crosses up through the T line or down through the T line, or when the stochastic RSI is at a certain level and the MACD is at a certain level, whatever. Okay, less is more when you're creating your alerts, because you just want to have your eyeballs drawn to the chart. But use these tools. So in order to stack the winners, you have to be at the right place at the right time, and we're trying to help you to get there without having to do too much work. Right, so have a handful of things that you trade and chart. Know them well, set alerts, and then manage the trades accordingly. And where you're setting alerts are in the areas of breakouts and or breakdowns. So whether you're setting alerts for, when price is at a major moving average, fine. I don't care. I just want you to get in the right place at the right time, whatever you're comfortable with. But use the alerts that you have on TradingView. They're there for a reason, right? They're there for a reason. And I highly suggest you use them. I use them. Does it drive the people around me nuts when my phone dings or my computer makes a noise, or, you get a text message and an email? Yeah, sometimes, and you gotta manage that. But listen, this is why they're there. They're there to help you, right? So get into the right place at the right time, which is kind of the chop, where you want to come out of the chop. I think we looked at this chart last week, right? This is a daily chart. This just happens to be XMR. It could be anything. Here's chop, right? When your major moving averages, the short-term ones like your 20 and your 50, and sometimes the 200 will wrap in there too. When all that starts to happen, you're choppy, right? No major science class required. You didn't have to go to MIT. When your short-term averages are twisting like that, it's choppy, because there's not enough price movement to move them apart, like you see here. Right, so look for opportunities coming out of the chop. Major moving averages as an example. Lots of ways to do it. But you don't want to trade this. You want to trade what comes after this, whether it be an up or a down move. And typically, when you get, nice green candles off the 2050 MA on any time frame, they're usually worthwhile. And that's what happened on this chart, right? You get that, and price just goes up, 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 and up. And even if you're a new trader, if you're using this type of a system, it's easy for you to follow, for anyone. Even experienced traders get mired in the muck of daily trading. But we just filter out the noise, right? That's what we're doing. Price just rides up. We don't get out until the chart tells us to. And we know how price behaves. This is a great example of a parabolic move up, and then price goes sideways back to the T line and or the 5 EMA, and then what happens? Boom, price goes higher. But how did we know or would have known that that's going to happen? Simply because the T line and the 5 EMA stayed diverged through all of this. So this was a parabolic move higher, which got a little tired and just took a rest. But the intention to move higher was still there because it held those levels. And as long as they do, like that, you stay in the trade because there's still more to go. And there's clear evidence of when it's over, right? So again, avoid the chop, get off the short time frames, and approach it when you sit down at your desk that your goal today and this week or this month is to stack your winners, right? As soon as you feel like the trade could go sideways or south and you're in profit, close it. Just get in the habit of stacking your winners. And once we can create a habit of stacking the winners, we'll get to the point in time where we can start to take those winners, and instead of them being 20%, 25%, whatever it is, we're going to make it more. But I need you guys to get in the habit of stacking winners. Don't worry about those percentages and things like that or where you want it to go. Just stack the winners. Okay? So what else did I want to look at today? Oil. Because everybody wants to talk about oil. And I'm just going to take the volume profile off for a moment. If I can find it. There we go. Now, once again, you know, for your crypto trader, you don't care about this kind of stuff, I guess, but it's all relevant if you care about how to read price on a chart, right? It's all relevant. And this is a 4-hour oil chart. I'm using it because I think the 4 hours or the shorter time frames can often give us a little bit of an insight to what's going on. And, you know, for the better part of a week or so, here's the chop, right? This is the stuff we don't want to trade. But here's the breakout, and it does actually turn out to be a nice green candle at the 50 on this chart, and this is where you make your money, okay? On the breakout. But let's talk about trend, because trend's important no matter what we're doing. Like, we need to know what kind of a trend we're working under, because we don't want to be trying to catch falling knives, right? We don't want to do that. I don't want to catch falling knives. What is it on this chart that we have run into a problem with? Now, this is a 4-hour chart, mind you, okay? That amber line is the 1,000-day MA, simple MA. And on a 4-hour chart, it represents about 2.44 years. So 1,000 days of price history on a 4-hour chart is almost 2.5 years. So where we're failing today is at a level of 2.5 years worth of price history. It's not just some line. It's years, multiple years of price history that it's failing. And that's relevant. So when I'm looking at a chart, this chart in particular, and those of you that know me know that I look at this chart quite frequently, and those that know me know that I'm running this somewhere in my analysis, 1,000 days. You would have known that I would have been sniffing out this failure, which is one of the things that allows me to feel the way I do about this asset. There's the 1,000-day on the daily chart. Yeah, 1,000 days. Okay, that's a long time. Yeah, it's almost 4 years. So if you're getting support over and over and over again from 4 years worth of price history, does it matter? Absolutely it matters. Just like it matters once you've failed it that you can't recapture it. There's a message in that. And where do we fail here? Right at the 20. Right at the 20. This is the candle that fakes everybody out. Or maybe it was this one. But in here, and we've talked about this, I think we talked about it earlier in the week. What was the resistance going to be for oil, the 20 MA on the daily? Well, here it is. And what else do we talk about quite frequently? We talk about when you have these failed breakouts and price moves up and then rolls over, it does what? Takes out the previous wave's low. That brings us back to where? The 50 MA. Fail one level, find the next. And this is how, when you start to talk to your friends about this stuff, it's going to sound a little spooky. Because you're going to be able to suggest in advance, when you start to see price behave a certain way, what it might be doing. Because you will have seen it over and over and over and over again. And it doesn't matter how bloody hopeful you are about price going in the direction that you want it to go, until the moon, the sun, and the stars line up, and all the technicals, and that's what I'm referring to, are in play for a big move higher, and you continue to demonstrate weakness, you're going to continue to get weakness. And I think that's what we're seeing here. Now, this is just from a technical point of view, right? That's all. This is technical. Right? Here's been our target since the beginning of time. We nailed it. Here's our weekly chart. From a technical perspective, what's happened here? Big impulse up. The failure comes basically right back down to the 20. This candle wicks the 50 this week and runs away. And at this point, looks like it wants to close below the 5 EMA. That's not bullish. I don't know where in anyone's world that's bullish. It's not. I don't give a shit if you had 2 green candles. Pardon my French. You can have 12 green candles in a downtrend, and if they don't break certain levels, you're still in a friggin' downtrend. So get over it. What does this thing have to break before it can be even considered to be something to contend with in a real way? This. 1,000 days on the weekly. That's what it has to do. This is serious support, and it's also serious resistance. Yeah, and if you're wondering, it's 20 years worth of price history. 20 years. So, when we failed 20 years of price history, of course you didn't. Of course your first breakout failed. But it's proving to be very difficult, isn't it? To break it to the upside. 20 years of price history, depending on how you look at this commodities, this could be 2 cycles. 2 10 years. But from a technical point of view, all I know is that you can't break the 50, you can't close above the 5 EMA weekly, You're fortunate that you're holding the 20 and you're kind of bouncing around between the 20 and the 50. But until you're able to show me in a reasonable manner that you can break 20 years of resistance here, it's hard to take you seriously. And that's essentially what we're dealing with. And price behaves like, doesn't matter what this is, could be anything, right? This is how price behaves. Any time frame, any asset. Now we know from looking at our charts the way that we do, this area back in here, look, this is all kind of resistance, and it's all in line with this. So what are the chances of price coming back here? Pretty darn good. Really darn good. And just like we are bouncing around between the 20 and the 50, like literally pennies away, we're doing exactly the same thing on the daily. Exactly the same thing on the daily. There's your 20, there's your 50. We're going to bounce between the two of them. We're going to come back, take out this low, tag the 20, or sorry, the 50. It would be the first touch. Broke out of it here. If you do tag it, it would be the first touch. Those first touches typically find support or bounce. If it's extremely bearish, then it would break. And probably look for that 61.66 level that's proven to be ground zero. Any asset, any time frame. It doesn't matter what we're looking at. Okay? Look at Bitcoin again. It's just really moving today. So still a bullish chart, and you just have to be careful. Where you're going to find the softness in it, you're going to find it on those lower time frames first. Right? If you're going to pick it up, it'll show up here. So you just back up to the 4 hour, still looks bullish. Back up to the 1 hour, still looks bullish. You know, you're getting a lot of support, and these look at your MACD. Moving average and signal line well above zero. You're getting another push higher. Starting to show up in your histograms. Same thing with your other two. That's showing you the momentum is still there. Is it feeling a little too hot? Yeah, a little bit. But it will surprise us on how much it wants to move. Is price getting a little far away from the T line and the 5 EMA? Yeah. And when it does that, one of a couple things will happen. It will take it's a good example, it'll take a sharp move down and come back to that level. Or if it's extremely bullish, price kind of hangs and it waits for the average to catch up. It's like time and price kind of wait each other out. They come back together. Price comes to this level again like we showed earlier, and then boom, it moves higher. So those are the two things. But it doesn't like to get far away from these levels, and when it does, you can start looking for pullbacks. But this is still a bullish chart, and look, I don't see, other than being a little too hot, but I don't really see weakness even on the 15 minute. Here's the 5, so have at her. But it doesn't last forever. It just doesn't. So don't get used to it, because it'll come back and bite you in the butt. Just when you think you're invincible, bam. And nobody needs that nonsense. Okay. Does anyone have any other charts they want to look at today? I should have turned it over to you guys a little sooner. Where you're all trying to figure out how to stack your winning trades. I'm sure that's it. And how you're going to be at the right place at the right time.
That's the one.
Hey,
How are we going to be at the biggest? What's up, Blunt? Be at the right place at the right time.
yeah.
Now, I had an early day, man, so I decided to hop on and
Oh,
get some
nice.
of this.
Nice. I'm glad you're here.
Good to hear you.
this is
If
daily BNB, and again, let's go to the weekly. Let's say you're just trying to build a bag. You're not trading with leverage. Does it matter where you buy? Yeah, it does. It absolutely does. And just as an example, I don't want to use this as an example of where someone would buy. This is just too early, and that's too obvious. However, if we go back into earlier in 24, a year ago, this chart's obviously topped out, right? And that's okay to say. I'm not trying to insult the BNB, right? It's not the point. This chart starts to obviously show that it's getting heavy. And you've just been introduced to crypto, and you've decided that you want to start to buy some BNB. This is how an investor or trader's experience gets ruined early. Right? Educated themselves on the space, and they found assets that they're interested in. Now they want to start acquiring them, and they start buying. So do you want to be the one buying up here, and then all of the sudden, price starts to pull back, and before you know it, you're like, oh no, where did price? What happened? Because keep in mind, these are weeks. You don't want to be that person, because you've burnt up a lot of time and money if you would have bought at the top. So just follow the chart, right? Now you know that when you see this kind of setup and you see certain indications on your chart that price is probably going to pull back, so you can start looking for opportunities at lower prices. I'm not saying you're going to catch this wick or anything. That's an easy say but a hard do. But what I am saying, you don't have to buy tops, right? Even if you're new to a space or to trading, you have to understand what price on a chart is telling you. This is another example. Buying up here. Now that you're trading well above the 20, 50, and the 200, which you would be, you know that you're probably paying a premium. And every time you go through that, you go through this painful period of waiting to get back to scratch. Make up what you lost to get back to your entry level, and then you decide to buy again, and then what happens? Price pulls back on you for a second time. This is what happens, right? And this kind of sours people's experiences. Learning how to read price on the chart, you don't have to just be a trader. It's crucial if you're investing over time so that you can avoid buying at inappropriate places.
Blunt, so just joined in at the last possible second. Sorry, today's been a long day. But if you go back to what so Bitcoin USD, looking at what the last chat um, and the last time frame. So I'm not sure if that was BTC.
I'm just having a little troubles hearing you, Mike.
So the chart you were looking at was
Bitcoin?
I think it was that. Yeah,
Okay.
yeah, yeah. So I'm not sure what time frame you was looking at.
Okay, what was your question?
My question was, it kind of like it looks like a inverted head and shoulders, and currently where
yeah,
you've got the price going bullish. So on the 1 hour time frame. So sorry, I'm just on the bus. I'm trying to make my way home. Yeah. So apologies, people. Um, joining in at the last very second. But yeah, it looked like a inverted head and shoulders. So you had your left shoulder, your head, your right shoulder, and then you crisp looking sort of breakout.
Yeah, I think I think listen, pattern um, identification is going to be is important, whether it's you're finding ascending and descending triangles, or head and shoulders, double tops, double bottom, and inverted head and shoulders. There's a whole plethora of things you're going to be looking for. And some traders have a style that works around that type of methodology, and that's awesome, right? Like, I look for patterns as well, but I have become more fixated on price behavior, more than anything else, because you can start to see a pattern form and then all of a sudden have an explosion, and it just throws everything
So
right
can I
off
ask you
the.
a question? Because like lately, I've been in a bit of like a crazy mindset because what I learned from you and what I've learned from my time. Um, so what do you think is better? Um, Again, you've got 20 something, 26 or more years, like you've been in the game for years. So you understand, and you understand how the market moves. So would it be better to utilize, and I'm asking this just for the benefit of all the students who are in the course, would it be better to utilize moving averages, or would it be better to the patterns? Because I've learned patterns, and a lot of the patterns I've learned do work, but then at the same time, everything you've taught me does work as well. So I'm sort of in like a limbo system where I'm like, right, so I see what Blunt is telling me this is happening right now. And then I'm seeing what the patterns, and both of them are very profitable, but it's, it's just a bit of a mind fuck.
So I think,
I'm not sure.
yeah, I
And
you
but
broke up.
again, every situation works.
Yeah, you've broken up a little bit, but I think I have the gist of what you're asking, and is that, or what you're saying, and that is
Because
partially is
like
that
using
you're
the volume profiler
right.
and
So
the volume profiler and how it works, it does work, and I've seen it on my back testing. It does actually work, but then it's also like it messes up like so. There's some trades that are back testing the volume profiler and it's fantastic, and then there's some trades that are forward testing.
so
It's a lot.
so
It's a lot, and
here's
it's
what I would
mind fuck.
suggest, Mike. Here's what I would suggest, and I think that what you're experiencing is probably consistent with many young, newish traders, and it kind of makes me think back to my own experiences, and I think I know what you're talking about, and that is this: you're using and learning at the same time, uh, slightly different methodologies and tactics, right? You're learning these chart setups that you're talking about are important, right? They really are, um, and you need to learn them, and you need to be able to identify them. What happens is that when you start to, especially when you're learning, try and roll in everything you're learning and then apply it all together in a methodology without fully understanding all of those things, it gets a little bit confusing, and you'll start to get the sense that you're losing. you know Remember, we talked about the race car driver that sits in the cockpit before the race, and you see them kind of driving the race in their minds, right? You start to
Yeah.
lose that feeling because you're looking at so many different things and you're distracted. So here's what I would suggest. I'm not saying you don't need to learn chart patterns, right? It's important, but focus on how price is moving. So this is going to be a less is more lesson, I think. So this is where taking things off of your chart will probably serve you better. And just as an example, here is, what time frames do you typically like to trade?
So ideally, I like, well, I used to be into the 15-minute time frame just because you see your profits about to hit your targets a lot quicker. But then I learned very quickly that the 15-minute time frame can switch on you very, very fast. I think it was, I can't remember what it was, like it was last week. It was either last week or the week before that. Well, one of the
So
guys in the group said like you be in the 15-minute time frame, you go to make a sandwich, and then you come back, switch something.
exactly, yeah. So
And yeah,
for
and
the
that's
sake of,
why I don't like the 15 minute. I prefer
okay,
the 1 hour to the 4 hour.
okay. So for the sake of our
But
conversation, let's use the 4 hour here. All right. So
yeah, yeah. I mean,
instead
ideally,
of,
entry wise, I like to enter it on the 1 hour.
okay, I
It's gonna
understand.
take a few days to play out,
Right.
but I prefer that just because
Okay.
psychologically, I don't have to be on the charts,
Yeah.
considering that for other
All right.
businesses.
I,
So
so this 1 hour
psychologically, the
chart,
1 hour.
okay, this 1 hour chart, Mike, is a real good example of what I would like to show you. So all I want you to focus on for the next little while is just how, like, just use our system. And again, I'm actually asking you to take stuff off of your chart. All right.
Yeah.
Um, just
And
use,
again, sorry guys if you hear background noise.
yeah,
I'm
it's
on the
okay.
bus and I'm making my way home, so I do apologize.
Just
Everybody,
use the
yes.
T line and a 5 EMA. And if you're using
Yeah.
our script, you're going to get, you're going to see the signals. And I just
Yeah.
want you to focus on, again, this is the 1 hour. This is a real
Yes.
clear example of a change in direction down here. This would have been an obvious buy for you. And I just want you to get in the habit of identifying the entries, which I think you do pretty well already. But where you get a little bit messed is when you start to apply and look at different things you're learning and then trying to apply
Yeah.
it to the trade that you're already in. So,
To be honest, it's always the pullbacks that mess with me.
okay, that's fair. This is a great example then, Mike. So
Yeah.
you
No,
would have
because like,
nailed you would have nailed this
uh,
entry.
yeah.
And this is the
Oh yeah,
pullback
yeah,
that
yeah,
we've
100%. And
this is
then you see that pullback that comes towards sorry, I'm on my phone, so I can't really see it very well.
I can
Well, you see when like it hit that and then it pulled down, yeah,
yeah.
and it made like a very nice support level.
So
That is where it would have tripped me out.
yeah, and it would be an area that would do that to many. But what I want you to
Yeah,
just focus on is you're going to get the good entries. I know you can do that. These pullbacks, pay attention to the divergence. All right. So if this is the candle you're looking at, this 1 hour candle, as it's playing out, as long as this
and did
divergence,
you see them candles? You see them candles? I think. Wait, go
just
back
just
to the
let me
left.
finish my point, Mike. Okay, one sec.
Oh yeah, yeah.
So
Sorry, sorry.
just as long as on these pullbacks this divergence is in play and still
Oh
extended like
yes,
this, you know that you're
yeah,
okay to stay in the trade. So you really only have to pay attention to a handful of things, and this being the most important one. As long as on this pullback the divergence between the T line and the 5 EMA is still intact, you stay in the trade long. Just like to the left of the chart, where the divergence, even with the green candles, completely stayed
yeah,
intact. All right, so that's all you have to think about. Don't overanalyze it. Just get your good entry, which I know you're already doing, and then on these pullbacks, just let the chart guide you, right? As long as that divergence is in play, you're okay. And if you look to the right, you can still see it, which tells you that you're still good. All right, so is all we're doing is we're not thinking and we're not listening to
yeah.
the narrative that the world has. We're just following the chart. All right, that's it. This was a really nice run. And you could have taken advantage of every
Well,
single candle if you don't get
yeah.
inside your own head. Right? That's what happens. And the next move, we don't want to trade chop.
It's like
Right? The
you
next
know
move, Mike,
what?
is is like
Well,
this, and it starts all
well,
over again,
yeah,
right?
yeah.
No, look at, see the divergence is still intact. These are the candles that make you nuts, right? You got a big wick up here. It looks like it's going to go to the moon, and then it looks like it's going to go to the basement. Pay attention to this. Big red candle, yes, but look, divergence is still intact. Okay? This is where you have to trust your
Yeah,
chart.
because there's a trading strategy called about the three
Yeah.
soldiers,
Yeah.
something like that. Yeah,
Okay. So, yeah, you're breaking up again a little bit, Mike, but I
yeah.
think my advice to you is take a lot of the stuff
Do you
off your
know
chart. Don't focus on
what?
chart patterns and moving
If
averages and all that stuff. Just
if I'm honest,
focus on uh,
if I'm honest, it's but I've got too much information in my head. So, for example, if you go to the right, yeah, just right there, just you got them three bearish candles
mhm,
and then that bullish candle.
mhm. So this is a great example, Mike. Like this
But
big move
that's what
down.
three soldiers strike. So that's
The the worst. So if you guys are managing your risk, which means you're not using too much leverage and your stops are in place, all of this nonsensical stuff
oh, whoa, 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 whoa,
doesn't really
whoa.
affect you too much,
Oh no,
right?
there's over there.
Someone's got their mic on. But those things
I am
don't.
so sorry. I did not have time to mute my phone. I
No, it's okay.
apologize. Thank you.
So these candles
Oh, sorry, guys. I
don't
do
really,
apologize. Yeah.
yeah, they don't really cause you too much grief because you would have been stopped out and protected. But what they do give you an opportunity is to reload, right? So, yeah, this is volatile and it would probably stop you out, but just focus on the chart, right? Like, don't get wrapped up into the chart patterns yet. Just focus on what price is doing. We're making it really easy. Like, here's another one, right? We're making it really easy to get in
So,
good spots.
Blanc, can we look at oil?
Hmm.
Can we look at oil? Because like I've been trying to understand how oil is moving, and understand what you taught us. I think it was like three or I think it was like 2 months ago. We're talking about how oil is going to be about 6 months something.
Hmm.
I think it was 6135 or something like that.
61, 66, right down here. Hmm.
6166.
Okay.
Right, right. So what's yeah. So I've been trying to short oil. I've been stopped out a few times, and you set it and forget it. And that's what I've done.
Hmm.
I've been stopped out. So on my losses on oil, I've made it up in gold. So I've sort of been breaking even because whenever oil comes in, hits me on the stop loss,
Hmm.
gold and Nasdaq has leveled me out. So I'm still like, because I know there's a gap in oil. I think it's that it just has
So,
61.
yeah. Um,
Yeah. So
again,
I'm just trying to understand. Yeah.
this
Because
is no
it's
different. It's no different than anything else, Mike, that you'll ever look at, right? The way that price moves around the chart on oil is no different the way it moves around the chart on Bitcoin or Ethereum or IBM, right? Price, the reason that we do these things and we show you on different time frames on different assets so that everyone can understand that there's nothing sacred about one asset on a chart to another, right? So what's happening with oil is, you know, is it volatile? Yes, and it is exposes itself to other types of geopolitical things, which we all know. But what's it doing on the chart? Well, here is your entry signal. This is the chop that you don't want to trade, right? When you're just trading flat like that, but you're looking for the breakouts and you finally get one. They're not all runners, right? Like, you have to deal with a handful of average trades before you get one that explodes like this. But since we're here, we're going to talk about it. Massive move up. This trend line's been here for ages and we struggle with it, and then price fails. Look at the point that we talked about. These points,
Yeah, I've seen that. Yeah.
right, are indicating changes in direction. And the reason the point shows up again is because there's a massive move in price that affects the shorter term moving averages quite quickly and pulls them, in this case, down, creating the point. So when you see that point kind of happening, it's a demonstration of that momentum in real time. And where does price pull back to? To the 20 MA to the penny,
Previous point.
right?
Yeah.
It doesn't hold. So now that it doesn't hold, we know that we've broken one level and we're about to find the next. Now, we haven't hit the 50 yet. The 50 MA ironically lines up perfectly with the bottoms of these candles and these candles. And it looks like we're going to do what we show you all the time on different charts and different time frames, that here you have this breakout that tests a certain level, in this case the 20, and look at the dojis form and the wicks form, and you start to arc over, all the little signs are there. Your 5 EMA goes red because it's starting to feel the sucking sound of dollars, and we're probably going to take out the previous waves low and come back to
Yeah,
the
because
50.
I've seen oil. Yeah, oil has rejected the 200 multiple times, and if you expand the time frame, I've seen oil is so the two. I think
Yeah.
I'm not 100% sure right now, but I'm pretty sure if you go on the 4 hour or the daily time frame, the 200
Yep, I've
is
got it up
where
right now. The
the
daily
price of
and the
oil is
20
going to
are
hit.
literally connected right now. So
Yeah,
that's a ton of
yeah,
resistance, right?
literally where you got that line going through,
Yep,
that's where
yep. And
that's where like I'm looking to enter oil for a short back to that 6150 area that you were talking about,
yep,
because the point of control when I throw it on when I put the volume profiler and I put it on trading view for
yeah.
oil, the point of control is literally about that point in the 4 hour time frame,
hmm
and then it just says like, yep, you've got nothing but clean trading from that point.
So on the weekly chart, you're actually kind of trading between the
Yeah,
20 and the
you
50 as
breaking
well.
through that line.
Okay, so
Yeah,
what can you expect on the weekly? You can expect price to oscillate between those two levels, and anything above and below them you would certainly pay attention to, right? Ironically, on the weekly chart, you're still working under a buy signal, even with that massive red candle. So, this is a kind of a quirky chart right now, but I still feel quite strongly that the 1000 MA is a more than meaningful level that it needs to contend with before I would take it seriously. And we haven't even talked about the fundamentals yet of oil, and we probably won't today, but I just don't see the world is awash in this stuff, and I don't see the $100 the $100 level anywhere. Not today. In the future, sure, but not today. So, anyways, that's oil, so we've covered that. Let's take a quick look at Solana. There it is. So, kind of a nice chart right now. The 200 MA has been a huge resistance for it, as you can tell. Broke it, failed it, came back to the 20, failed it, came back to the 50, and now the whole thing returns in reverse, right? You try and challenge to the upside, and you fail. Now you're trying again. The 200 looks like a reasonable target at 164.80, somewhere in that neighborhood. It's meaningful if you break the 200, right? Because if you break the 200, that's our most basic bull bear indicator. You're trading above the 200 on any time frame. That time frame you are bullish. So get above the 200, it would be an important level. And what you want to do, mind you, is take out these highs. If you can take out these highs, just like Bitcoin did on its run, then you might be onto something. And maybe what's happening is they're just waiting for everything to catch up, right? So, but it's a decent chart, Solana, though. What else do we want? XRP.
Hey, what's up, Blunt?
Hey, how you doing, Rico? It's like
Hey,
I know
what's
you
up, bro?
guys now by the sound of your voices. That's pretty cool. Eh? So,
Yeah, it is. I appreciate it, honestly. No, I saw you talking about Solana. You almost summon me every time you do that, but really wanted to come up here because I finally, caught back up with a lot of things, but want to see when we can set up where you could join me on a live stream maybe in the coming weeks.
sure,
Not
love
sure what
to.
your schedule's looking like,
Yeah, I'd love
but
to do that. That'd be fun.
yeah. So just let me know if you want to shoot me a DM once maybe we'll do it on a day that you're not doing your Tuesdays and Thursdays, and
I
we
was
can
thinking
set something
exactly the
up.
same thing.
All right, cool.
Yeah, no, that would work. Yeah, I'll do that when we're done here today.
Sounds good, bro.
Awesome. Thanks, Rico. I look forward to it. XRP, I think, is another chart that there's the consolidation, right? If you want to be a holder, this is where you want to accumulate. When price is doing this, when those major moving averages are just twisting together, twirling around, you know that's a great consolidated area when you see that, and then price explodes. Like
Okay.
literally explodes. And it didn't completely melt. I think if we go back to using fibs, right, just if we do this real quick, I guess it did, like it literally pulled back to 618 to the penny and then bounced again. Wow.
I've got a question about the volume profile,
Mm-hmm.
because it is a fantastic tool. Like, to be perfectly honest, I've never really understood the tool. So until I go into your charts and until you tweet me, so you've got the red line as the point of control,
Yep.
right?
The
Got the
red
blue
line.
line at the top, blue line at the bottom, which is shelves, right?
So yeah,
Anything in between.
no, I'll explain it to you.
So
It's
red
actually
line is the
really
point of
simple.
control.
The red line,
So
that point of
mhm.
control, Mike, that's averaging out the past trading for the amount of look back that it is. I think it's 200 candles in this case. And that's kind of the average volume and price area in that
Sorry,
where you
say that again. Say that again. So the red line in the volume profiler
mm-hmm.
is averaging what?
It's averaging all of this past price and volume over the length of the look back, which I think is like 200 candles. All right, and it's
Oh, so
measuring
it's calculating the past 200 candles within the average line of that line.
right. So
So, for
just
example, USD JPY is calculating the past 200 lines, and the average price of that line is about 145.
yeah. So if you look into the volume profile, that number of volume bars, so it's looking back 200. And the reason I don't change it is because I want you guys to be able just to open up an indicator and use it right away. So it's exactly how I would use it, just looking back 200 candles, 200 bars. And what it's doing, it's
Yeah.
averaging all of that. That's why it's the point of control, and that's why it's so important. This level here is just identifying the upper value range, which is the top of
Okay.
all of the relevant condensed trading, and then this is the lower one. This up here is really light trading. Same with down
So,
here.
so, like, because obviously the volume profile switches every now and then. Like it shifts between like
It's
maybe a
dynamic,
one moment
so
with
with
this
every
price.
candle that
Yeah.
changes, the volume profile ranges might change a tick as well. Yeah.
But the way the indicator itself is calculated is this is the average price of this price over a certain period of time.
Yeah.
Didn't know that. I
And the
didn't know that.
volume, it's picking up volume, right? What it's showing you, Mike,
Yeah,
is
yeah,
where
yeah.
the trading has and has not been. All right. So everything up here, like when price pulls back on
Right,
this 4 hour chart, it'll probably pull back
right,
hard, right? It's got this parabolic move up,
right.
creating this big gap in here, and it's
Yeah.
lighter volume. It's not necessarily that denser trading that we see within this range.
So the green lines are sort of like, right, this is where money's sitting at. But
Yep.
then the green lines are
Yeah.
like, right, this is where we want to take price up to, but it's gonna take a while for us to get. So, sorry, explain parabolic to me again, because
So
like
when I say
I'm
parabolic, I just mean moving up really fast. Okay? And that's kind of what's happened here with XRP on this time frame. Look at the 50-day moving average, nice big green candle, and
yeah.
price goes boom. Love that.
I've always heard of that terminology as like exponential, not parabolic. So I actually
It's
don't even know what parabolic
it's
means.
sorry, it's just me saying price went up a lot, really fast. That's all
So
it is. Okay.
what is
That to me. This
the
is when
so
this is not how prices.
parabolic is a term.
Yeah.
Parabolic is a term. What does parabolic actually mean?
Are you
Like
asking me?
like you yeah, 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 yeah. I'm asking you because you were telling us like this is parabolic, and some days I'm very, very curious. Some days I pretend like I know some shit, even though I don't know some shit. This is one of those days where I'm like, yo, blood, actually, I don't know. And
So
I'm a very proud person, so I don't like to sound like a dumbass. But sometimes I need to sound like a dumbass, and it takes
well,
me a lot of
no, no,
like
no. Listen, guys.
humility to sound
You
like a dumbass.
but one of the
So,
things.
but this is a psychological thing.
Yeah.
So today I'm on that mode where I'm like, yo, I don't know what the I don't know what parabolic means. So,
So when I say that
not just
price,
parabolic.
I'm going to explain it to
Yeah.
you. When I say that price went parabolic, it simply means that price has gone up a lot really fast. And this is what an example of that. All right, this is price typically
Is
likes to
that
go
what
a little bit up.
parabolic means? Like just to generalize
Yeah,
the word parabolic.
yeah.
So does parabolic mean it just went up fast?
Without getting overly complicated, yeah.
Can you complicate it but also simple it down for us? Like I'm a whole completely new trader. You and my friend has told me about come to Blunt House technical analysis class, and today's my first day, and you're telling me about parabolicism, and I
Sure,
don't know what the fuck parabolic means. So Blunt, can you please explain what parabolic is?
sure. That's parabolic.
Well, what is that?
That's this extreme price movement higher.
So is parabolic an
That's all.
extreme price movement?
I'm not trying to be scientific, Mike. It's just me
No,
using
no,
a
no, no.
term to explain when price rapidly goes higher.
Mm.
This is
When it
to your
goes
left
But
crazy,
here.
Mike. That's it.
yeah. So
When
this
price
this
goes
this is where I'm
crazy,
coming
it
in.
goes parabolic.
Yeah. So this
Yeah,
is just simply
this is
this
what
would
I'm
be an
asking you because
example of
like
that. Okay, that's just all I'm saying. It's just when price moves up really, really, really fast, right? There's
so
nothing more
definition
scientific
of
to it than that.
definition of parabolic is when price goes from stagnant to explosive.
When I'm talking about it in the context of price on the chart, yes. Right?
Mm.
Okay.
So literally like what you showed us, yeah.
Mm-hmm.
So you went like you showed us when it was, um, yeah, exactly. When
Right.
you like it was very very choppy, and then
Yeah.
out of the blue it went from stagnant to just explosive. So
Yeah.
so parabolic is literally that. It doesn't matter whether it's going down or whether it's going up. Parabolic is when it's stagnant and then it explodes from one side to the other side.
That's fair.
Am
Very
I
fair.
correct?
Yeah.
Okay, cool.
Okay,
I
so
just wanted to,
yeah,
yeah.
that's all
I
I mean
wasn't
when
trying
I
to
say
undermine. I just wanted to like, cause
sure. I
when
get
you
it.
use such big words, I have to dumbify it for myself. And then I'm sure there's other people in here going like, what the
Yeah.
fuck is like,
So,
like using big words, man. Like I have to dumb it down myself.
yeah. No, I hear
So
you. So it's all like
yeah,
again, I want you,
right.
your challenge is going to be to focus on only a couple things, right? I just want you to focus on a handful. Less is more in your case, okay? So
Yes, sir.
um, just focus on when you get good buy signals. I know already that you are good at making good entries. I know that already. So I think for
Yes,
you, it's just getting Mike to manage the trade when he's in it, right? That's all.
that is my biggest
Okay.
problem.
And the best way for you to do that is to stay out of your own head and just follow the
Yeah.
chart. So this would be another example that would drive Mike absolutely nuts. You're going to have 16, 20 hours of kind of sideways, slowly descending
Nothing.
price that would have made you
Yep.
absolutely bonkers. But what you need to focus on is block that stuff out and just focus on the fact that, hey, this, here's an example of a parabolic candle. This massive move higher didn't completely retrace itself. As all it did is essentially went sideways back to the levels that we're comfortable with. Its divergence never changed. It stayed open and intact higher, and then boom, price goes up again. And that's the kind of stuff I want you to
Uh,
focus on. I don't want you to focus on any more than that, because if you do, you're going to get inside your own head and you're going to overthink your trades. And you're probably going to close
um,
trades because you've talked yourself out of them, or not make trades that would have been good ones because you've talked yourself out of it, and then probably make a bad trade as a result, right? That's kind of what happens. So I think for you,
I
less is more.
wanna. I would like to give just a little bit of experience of my last trading week. So from Monday to today, basically. So one of my prop firms that I use, um if I blow, so basically I was in the funded stage and then I messed up, and um I'm now like I didn't blow the account. Like I mean I blew the account, but they've allowed me to redo phase two
You
so
get a
that I can go
mulligan.
back into the funded side. Huh? So basically today today I messed up. Today I messed up because I did not follow my rules and regulations, and over leveraged. And I know I should not have over leveraged, but you know when you get cocky,
Mm-hmm.
especially when you're learning from blood,
Yeah.
you get very very cocky. So anyway, today I got very well. I got cocky, and basically just everything went wrong. So I'm now back in phase two, so I gotta just make 5%, and then I'm back into the funded stage. Um, but what Blunt's talking about, that helped me get into the second funded stage and also to get a payout.
Well, that's good. I'm glad. And look, you have to cut yourself a little slack. We're all going to make mistakes. The
Yeah,
idea is,
yeah.
is that
I made horrible mistakes today. I made some mistakes, which which very much annoyed me.
yeah, it's going to
I haven't
happen.
even finished journaling. I haven't even finished journaling, man.
Yeah,
Like, I'm so mad at myself for today's trading. It's actually unreal.
you're going to have those days, and I think the important thing is that you have to have the ability to document what you did right and what you did wrong. And if you're journaling,
Oh,
which no, it doesn't. I don't want you to think that it sounds like what a 16-year-old girl does, right? And that's why you don't want to make a trading journal, because that's not it at all. So if you journal it, you'll know what you did wrong and you'll know what you did right, and take a step back and just, live to fight another day. And if you're mitigating the risk using stops and at appropriate levels, you won't get hurt too much, right? And it's not just about the winning trades, it's about mitigating your losses a lot too. So
Um, with your, this Tuesday and Thursday classes that we do. Um, like I think you should throw in like the last hour of it should be all about trading psychology.
I'm sorry, I missed your last trading what?
Yeah, so the last hour to 2 hours of what we do every Tuesday and Thursday, if
Mm-hmm.
that's okay with you. I think we should throw in some trading psychology because technical analysis wise, we understand. I mean, you've got so many people buying the scripts and all that.
Mm-hmm. It's interesting. When I wrote the script and this whole methodology around it, it was done because I didn't want to have to think about things to your point, right? That I didn't want to be the one overthinking um, everything because I had a tendency to do that and I recognized it. So what I was trying to do is take out all of the best pieces, automate it in a sense, so that it cues me to do the things that I would instinctively do, but without thinking about it, right? Because if I have a weakness, and we all have one, that would be mine. I can get inside my own head and think too much, and that's why when I speak about that stuff, I'm more speaking about myself. So I have a tendency to do that, and the script I've written helps me do that less. So what I was telling you to do is something that I would do myself. Focus on what the chart's telling you to do, right? When it's telling you to do it. Understand what's on the chart and where, because it's important. Did I know that the 1000 MA was here on this 4 hour? You're damn right I did. Do I know that it represents almost 2.5 years of price? Yes, I do. Do I kind of combine that with some of the stuff that's going on fundamentally right now, and that would be an awesome place for it to fail, wouldn't it? Yeah. That's why we're here. It's just putting this
I
stuff
want to speak on the my bad, Blunt.
Yeah, go ahead.
I want to speak on the mistakes as well because um, I just been on fire lately, great rhythm. And yesterday was the first day that a little bit of water splashed onto the fire and stuff, right? It was like when my coals got wet or something. Because since like the early I say like the 24th or something like that, I went to my brother's wedding, and even like on the way to my brother's wedding, I was printing. I got there, I printed. On the way back, I printed. And even like yesterday I was doing really good, but it's nice because I got this book from my brother, The Art of Worldly Wisdom. And while I was there for like 10 days, I'm reading like through this book and stuff. And I found this one. It's like they're like proverbs or whatever. And so they're like quick little
Mm-hmm.
bam, bam, bam to get you out of there. It's called the Art of Worldly Wisdom. I got the audiobook now because it's just that amazing. But one of it was like, if you do it 2 times and even with your method, if it's not working, maybe it's just not a lucky day.
Yeah.
And back in the day, I used to like fight that, and yesterday was a good day because I had where the majority of the day was green, 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 and then in the afternoon I had 2 bad trades, and I felt the urge to freaking just want to do another one. But that Art of Worldly Wisdom was like, if you mess up 2 times, just save it for another day. Maybe the luck has run out some days. Some days have luck in them as well, right? So I was like, let me just walk away. I'm probably just too zoned in or whatever.
Yeah.
And
And listen,
yeah.
just like
Sorry,
price on
guys.
the chart, just like price on the chart, your winning streak or your focus or whatever will get a little tapped out, and it needs to take a rest. But it doesn't mean that your success is going to totally roll over. Is all you're going to do is take a little bit of a pause, catch your breath, and make your way back to the 5 EMA, and then kick ass again. That's all. It was you're just taking a little bit of a small retracement in your continued uptrend. That's all you're doing, Rico.
Yeah, and I can't wait to have you on because Delatoshi knows. He's like, I see you've been using, because I mention you all the time. Your poor ears must be ringing like crazy, brother. So I gotta have you on the stream because, and I gotta give respect when it's due, and like just the method a little bit, and the indicator has really. I tell people, I'm like, I don't care what style of trader you are, or like whatever you might be doing, just this will help you out refine it all the time. And I mean, my stuff is super refined right now. It's like we've been doing alchemy on this stuff, and it's a
Well,
lot
that's awesome.
it's a lot more fun doing it.
No, that's great. And again, I'm happy to come in and do that. It'd be fun for me. So
Yeah, we need you in this space, man. It's been going good.
okay.
I tell everybody, I was like, the game is sold, not told, but this guy's over here telling everybody how to do it. And yeah, so I've been having a great time and getting some really good trades with, obviously Solana and matching it up with BTC because it likes to trail a little bit behind. And it's kind of really easy to trade. I almost feel bad sometimes saying that it's really easy because people are probably looking at the screen as like, yeah, there's a bunch of noise on there. What are you talking about? That looks like another language. But it's like once you absorb it so much, I've been using the indicator for like 2 months now. So going probably on 3 months. And now it's like it's my baby now. I trust it a lot better.
Well, I think listen, that's half the battle for all of this is just trusting our charts, and I understand that completely because it took me years to get to that point as well. This is the 4-hour Solana chart. I guess I had the 1000 MA up on this chart, and look at your rejection. Like, look how price has been reacting to it. It's kind of trending right through it, but this is 2.5 years of price history. So when you see that MA on your chart now, it's not just a real long time, right? You can actually put some context behind how long a time. So when you see the 4-hour chart like we did on oil and it started to roll over at the 1000 MA, what it was telling us is that it was rolling over at 2.5 years of price history, which, based on how it's been trading over the last 18 months, was a place that I would be watching for it to do just that, because we're going to pick up the daily moves on the 4-hour first. And that's what we did. So the reason
For sure.
I've done
That
it
and
this
filling the
way,
gaps.
sorry, Rico?
No, that and just like putting that together with like filling the gaps, I swear, like I was telling people like yesterday, it's like that volume profile, like a lot of times you never knew why things were runners, right? Like when you're trading, you just get that lucky one.
Yeah.
But like even looking at this oil chart right now, and like I see that dip that just came really far down because that point of control when it lost it, you
Mm-hmm.
look at that volume profile, look at that gap that it filled. Even on this chart, I could see it. It's like that's how you can find these runners. It's because of those gaps.
Yeah.
Before this volume profile, you'll guess like which one's going to be the runner, which one's not going to be the runner. Well, if you're getting into a trade and there's a volume gap, like this one that we're looking at right now, that looks like there's a gap to the downside to test that
Mm-hmm.
orange EMA. You can probably figure out, okay, this is going to be a runner because of that gap in volume right there, and that's how you start finding those
That's right.
movers and stuff.
And furthermore too, you've got 4 attempts to break out of the value range, right? That failed. And you
Right.
know your point of control is way down here. So as you're failing this range, because this is obviously a level of resistance, the point of control, even if we're not using anything else on our chart, becomes a target, with ultimately, you're hoping that you can drop down to the lower value range, which it looks like it's going to do.
The point of control is literally magnetic, guys. Like,
Yes.
you
Yeah,
know,
when I
that
say
thing
that,
right
I think people think I'm kind of just, trying to find a way to explain it. But no, price is drawn to these levels. That's why, to Mike's point about what was more effective, moving averages or chart patterns. First off, I don't think there's a right answer. I think you need to be able to identify chart patterns so that you can be at the right place at the right time. Hey, that looks like a double top. Maybe I want to short it. Oh, that looks like a double bottom. Maybe I want to long it. You want to be able to identify that stuff in its simplest form. But once you have, you can't, or at least in my mind, I can't structure a trade around a double top or a double bottom. There's more to it than that. And sometimes they don't materialize. So that's why I focus on what price is doing on the chart, because there's a story that it's telling me as it's doing this. Again, we go back to the 4-hour. As it rolls over here, it's going to look to take out this low at 65.
And you see another gap right underneath that low.
Yeah.
Like if you look at
Yeah.
that, so it's like that's why it's you'll start to understand that sometimes the the price action is incentivized to do some of this stuff
Yeah.
because it's like one of those race car games back in the day that you hit the arrows on the floor and it just sends it a little bit faster. That's how those gaps are in those volume profiles. Like those arrows, it's like yeah, you get boosted to the next spot.
And to your point, Rico. So if you look to the right of your chart, and this is what Rico's talking about, is this gap down here. But this shelf that's created is created by this bench of price to the left. So when I say current price is looking for past, okay, it consists of a few elements. First off, here, this is a failed breakout, so we're going to roll over to take out the previous wave's low. And this bench of past price that's created this shelf is a likely place for price to try and sit. It's literally looking for a place to sit down as it's falling. It's like, you know, Wile E. Coyote catching his pants on the tree that's sticking off the cliff, right? That's basically what that is.
Yeah, it sure is.
So,
And you'll get better at seeing that. Like most people want like that little shelf right there. You'll get better at seeing it, and then you'll start hoping that it breaks that shelf. Like let's say you're in this short right now because you know that there's another gap underneath in that lower value range. You're like, oh baby, if you break that shelf right there,
yeah.
I know we got ourselves a runner, right?
That's right. And to your point, like, so at this point, what you're doing is, okay, you know, I've rolled over. I'm now trading below the T line, below the 5 EMA. I've got divergence in those two levels telling me that my trend down is still intact. I think this is an interesting test, right? Like, I love these ones, you know, the ones that snap back up and then hit the 5 or the T line and then completely fade again. Like, those are great opportunities to re-enter your short. You've probably figured that out by now. But this same thing, this could be Bitcoin, it could be ETH, it could be Solana, it doesn't matter. This is the way price behaves. The moving averages are just basically, what is a moving average? It's a representation of time and price. So to Mike's question, you know, is it better than something else? I don't know if it's better than, but I like to know where price has been over time. And, you know, particularly the 20, the 50, and the 200 are very, very important. They're kind of like the three amigos for me. They're always working, you know, together. Well, look how relevant on this 4-hour chart the 200 MA was to hold price up. Just as the, you know, the 1000 MA on this time frame was resistance. What did we do? We broke one level. You know, I don't hate to sound like a broken record, right? But you're trading above all three. We talk about this every week. You're trading above the 20, the 50, and the 200. You have to look over your shoulder to prepare for a pullback to test, at the very minimum, the 20. Right? So you're going to come back and test this level. You break it, you find the next. And you break that level, you find the next. There's no magic here. There's not bullshit. There's not you know, there's not pulling strings behind a curtain. This is just how price behaves. You can choose to accept it or choose not to. Right? And what we see on our chart doesn't necessarily jive with fundamentals all the time. Why is that? It's because the price on the chart is a real-time representation of what money's doing, not what people are saying. Don't you love it when it's earnings season? Company comes out and has a great report. The CEO shows up on Bloomberg and CNBC in the morning, and whoever else will give him 5 minutes of air and the stock tanks. Well, same store sales were good. Projections are good. The smart money always knows. I am not the smart money. The people in this room are not the smart money. Our collected wealth together wouldn't qualify for smart money. But how do we know what the smart money does? It's because their fingerprints show up on our charts. We just have to be able to figure out what they're doing. Right? This is a real-time representation of what money is doing and not what people are saying. That's why I don't give a crap about what anybody else says. And hey, like, don't the bankers, aren't they great at that? Right? Aren't the bankers just awesome at telling everybody what is going on in the world and that they're the only ones that can figure it out? Like they must have some real special skills, right? Whoops, wrong chart.
Look at all the news that's been coming out, and all the people like the last couple of weeks that have been panicking, and now Bitcoin's at about to be 114,000. That I don't listen to that stuff either. I mean, you can't scare me with words on a TV screen that you're reading off a prompter. Anyways, it's like I'm watching what price is doing, and if you guys want to drive it down, then I'll monetize it that way too. You guys want to drive it up, I'll monetize it that way too. Like you said, I've been using your phrases. I'm indifferent to the price. I'm gonna print no matter what you guys are doing. And I like that saying that their fingerprint is left on the chart. It truly is.
Yeah, it's the fingerprints of money, right? That's what we're reading, the fingerprints of money, or the fingerprints of people that are, certainly moving big money. The reason I'm showing you this is a chart of J.P. Morgan Chase. I could have picked any of the big banks. It just is an easy symbol for me to pick up. You have a 20, a 50, and a 200 on a weekly chart, along with the T line and the 5 EMA, running our script. Stripped out everything else. This is a weekly. To the right of your chart is the week of May 14th, 2007. Now, are we trading above the 20 and the 50 and the 200-day moving average? Yes. We've had support of the 20 and the 50 for quite some time on this weekly chart. Now, if this was a 15-minute Bitcoin or Solana or anything else, we would be identifying this as a top, right? We start to see some change in color. Our 5 EMA is picking up a little bit of selling pressure. We start to see the red candles. We're starting to notice that distance between the 5 and the T line is narrowing, and now it's actually, instead of pointing up, what's it doing? It's pointing down. Find yourself on the 20 all of a sudden. This is a week, remember. So you have a pretty big week of selling. There's your confirmed sell signal. So we've broken one level, we found the next. Break the 20, find the 50. So now we've broken the 50. And if you notice, look at the divergence. Okay, look at all this. We know that that's telling us that for whatever reason, there's selling going on. We have no idea what comes after one candle to the next. But through all of this BS on this weekly chart, did we get a buy signal? No, we didn't. What did you find? The 200. Now I want to point something out. Just because you break one level doesn't mean you immediately go to the next, right? That's not how the world works. There's usually some oscillation and it works its way down there. It's that ebb and flow of price. But you break it, you found the next. First attempts typically bounce. Did it get some support? Yes, it did. Did it fail? Yes, it did. Did it break this level? What are you looking for? The 200. Did you find it? Yep. Now, the reason I'm showing you this is because through all of this that's going on, did the people at J.P. Morgan not have anybody on staff that knew how to read price on a chart? Did they have nobody? And I'm not being funny here. I'm being serious. Because I do this every week for you guys. You guys do this every week. You don't even need me anymore. And you're trying to tell me that those guys and girls and whatever the hell else was in those four walls couldn't read price on a chart the whole time they were telling you that everything is just fine. Everything's fine. Don't worry about it. Don't worry about anything. Just believe us, right? Because we're always going to tell you the truth. You think they are? I don't think so. I don't think so. Nobody told the truth in here. Nobody told the truth. Oh, and by the way, that's a 1,000-day moving average. on a weekly chart. You just failed 20 years, dude, of price history. And when you tried to take it, you fought with it again. So this is during the great financial crisis. That's why I'm telling you this. This is why trusting your chart is more important than anything else. Because you, in the simplest of terms, would have known way back here that this would have been just like any other top that we would have seen a million times. And you, because you would have been trusting your chart, would have taken the appropriate actions to do what? Protect yourself from risk and to monetize this chart. Like maybe the people at JP Morgan were shorting their own stock the whole time. I don't know. I have no idea. Is all I know for a bunch of people that make a hell of a lot more money than we do, they should have been able to read their own friggin' chart. I'm sorry. And that's why we do this. Because no one is going to look after you better than you. Here's a monthly. Even on the monthly. And hey, by the way, this is why we do multi-time frame analysis, right? This is the fractal element of what we do. Here's your monthly chart. That's an obvious top. But everything was fine to those guys. Come on. We do this to teach you so that you will not become victim to anyone else's nonsense. That you will be able to confidently read price on a chart and know what it's telling you. That's why we do this. And by the way, I'm just a guy, right? I didn't work at JP Morgan. I didn't go to MIT. I didn't go to Harvard. I don't think I'm the village idiot, but please understand that you don't need to be in finance to know how to read price on a chart. I love listening to people in finance talk about where they think the world is going without the ability to understand how to read price on a chart. Although some of them think they can. So you don't need any special skills, boys and girls. You just have to have the appetite to learn and the willingness to do better. And if you have those things, there's chances are we can teach you how to do this and ultimately change your life for the better. So that you don't end up with a couple thousand barrels of oil on your front lawn.
You just did a mic drop, Blunt. I'm going to do this for Blunt because I know Blunt, I'm going to be the influencer for Blunt, but I know we got some people listening on X. If you guys can, I'm going to look out for him. Give this man a follow. I know you guys are listening on X. You guys are probably listening up in here. Obviously, you guys already know, but if you're a listener on X, make sure you guys give Blunt a follow. A lot of information. Even if you're listening to this later on, tap in with us in the FEG chat if you guys are listening, or just give Blunt a follow on X for sure, because you're going to be picking up a lot of info. So,
well, thanks, Rick. Yeah. I appreciate that.
For sure, because I see listening on X, and that was a huge mic drop. Like, I go to spaces all the time, and I get so bored, and it's rare that we get some new information. And it's like, that's why I said I can't wait to have you on and stuff. Delatoshi knows me. Me and Delatoshi was making your ears ring and stuff because we're like, yeah, we love Blunt and all that stuff,
Guys,
and I was like, yeah, we got.
I'd love to come in and do that. Yeah. That'd be fun. So.
Yeah, for sure. We'll do it like a giveaway thing or something like that. So like that, we can have some really good numbers, and we'll just have a fun stream, man. We'll just milk it for as long as you can, and make some noise, because a lot of people need to listen to this, because I try to do my best, like calming the market down. We can't calm the whole market down, but I can feel it sometimes when like the whole market's panicking because the news is making everybody panic when the chart is saying something completely else. It's like, fam, we're okay. I'm telling you, they're lying again. It's like, but it takes practice,
chart, right? That's all it is.
Yeah.
So, I gotta run. I got a call that I'm committed to be on, but I'll connect with you in a little bit, Rico, and I want to thank you guys for coming in today and supporting these streams. And please feel free to invite your friends, and we'll get everybody trained up as quickly as we can. So thanks very much, and we will connect with you guys on Tuesday of next week. And thanks, Rico. We'll set that up, and we'll make that known for everyone to join us there too. Thanks a lot, guys.